Thank you, Daniela. Hello, everyone. I am Stephanie Magnus. As Daniela mentioned, I am a business counsel with the DC Women Business Center. I'm here to assist you in all your business counseling needs. Whether it's starting your business, you have some registration issues, just whatever it is, please feel free to schedule a session so we can best assist you. So we're going to get started with our presentation, which is Welcome to Understanding Financial Statements. So what are financial statements? Before I go, I want to make sure that we always want to give a disclaimer that all the training that we're doing is not to be intended for either tax or legal advice. If your situation is a little bit complicated or you need individual attention, please consult with an advisor before making any business structural decisions. Okay. So financial document housekeeping. This is, we want to make sure that we have all the documents we need to make sure that we are ready for any opportunities, whether it's a grant, a business loan, government contracting. We want to make sure that we have all of our documents that we're supposed to have in our business. Next slide. Thank you. So what are financial statements? So financial statements are the most important documents any business have. They show how your business is operating and it shows your financial position. So for me, having these financial documents is the first step to reaching your goals. Whether you want to enter a new market, develop a new product, or set up or move on, you'll have the numbers to back your decisions. So the three main documents that we're going to talk about today is balance sheet, profit and loss, and cash flow statements. So document one, what is a balance sheet? You probably hear this all the time, and you probably thinking the word means, what am I balancing? So it's not like you're balancing anything, but you're going to be balancing more of your assets versus your liabilities. So this is the record of your business assets and liabilities along with this capital. It is your net worth. So this is the things I always tell people is when anybody always asks you, hey, what is your net worth? What is your valuation? What is your business valuation? If you have your balance sheet, you're able to give that number. And a lot of times investors, partners, or even lending institutions want to know what's your net worth. And I always tell people, if you had to liquidate assets today, how much would you be worth? And that's what the balance sheet kind of gives you. And so I put it on the right-hand side, a sample balance sheet. And on the left-hand side, you're going to list all your assets. And on the right-hand side, you're going to list liabilities. So your assets are anything, like I said, that you can liquidate, that if you needed to come up with the cash, you can do it. It's whether cash on hand, petty cash, any accounts receivable. That's like if you have invoices coming in. And so, you have purchase orders coming in, you have invoice coming in that you're going to be making money off of. That's kind of accounts receivable. You can add that up. That's a tangible number that you can list. Any inventory value. A lot of people have inventory that are worth value. They can sell it today. They can liquidate it or sell it wholesale or doing a going out of business sale. That inventory value is an asset. So if you think about it, if you have a storage unit full of say you own a bath and body company, you got a lot of products in your storage unit, you can actually have a sale tomorrow and liquidate some of that inventory value. Investments. If you play the stock market, whether you have a stash account or a Robinhood account, or you play the stock market or you invested in other people's business and you get a return on investment, that investment is also going to be your balance sheet. Any prepaid expenses, land improvements, building, vehicles, anything that you own, like I said, that you can sell today. So your liabilities is what you owe people. And so your liabilities is this part is going to be your accounts payable, who you owe, who has given you an invoice that you have not paid yet. Any notes payable, any long-term liabilities, taxes, if you owe taxes, federal, property, miscellaneous, payroll, all that is your liability. So once you take your assets and you subtract it from your liabilities, that's going to be your total net worth. So that's how the balance sheet works. And this is a good tool when you want to present your case to an investor or a lending institution. So the key area is it's a long-term view or track record of how your company is doing. This is the most important because if you have too many liabilities, just think about it when you have personal, you have your personal, when you go buy a house and they look at the debt to income ratio, this is the same thing. You want to make sure that you have more on the left-hand side, which is assets, than you have on the right-hand side, which is liabilities. Document number 2, this is your profit and loss. This is how you can say, okay, this is now we're talking about the first document was more of your assets. This is your income that's coming in. So now we want to examine your income. And this is where bankers or investors or partners, anybody that wants to be a part of your business or give you money or grants, wants to know what is your total income, and then what is your loss, and then you need to come up with your net income. And so profit and loss basically is the summary of your business earnings, expenses, and net profit over a specific amount of time, usually like a year. So if your fiscal year is January to December, then you would just put starting date would be like January 1st to December 31st, which is the end of the fiscal year. And so what you want to do is report all income. That's your gross receipts. That's anything that you have brought in from the business, whether if you sold a service, you sold merchandise, products, people have given to you. Maybe you did some crowdfunding, any grants, loans, anything that you're going to bring in that you want to prove that it's revenue. A lot of times, even when you're trying to get a lending institution, they want to know that you're making enough money to pay the note back. And then cost of goods sold. So I call it COGS. That's the cost of goods. So whatever you sell, you want to put that there. And then that's going to be your gross profits. Now we're going to talk about expenses. And so if you typically, if you're a sole proprietor or LLC or partnership or a SOC corporation, you're allowed certain amount of expenses. And so I'm going to use sole proprietorship and LLC for this example. So as a sole proprietor or LLC, you're allowed to write off a numerous number of expenses, whether it's rent or mortgage, utilities, office supplies, internet, phone, travel, meals, things like that. You want to record that as your expenses. And so for example, like for meals, up until December 31st of this year, if you're not aware of this, all meals are 100% deductible. This came from the American Rescue Plan. And so if you have not gotten your receipts and stuff like that for your meals, make sure you do that, because after December 31st, it goes back to 50%. But that's something you want to record in your expenses. Office supplies, if you bought computers. So those are going to be your expenses. And the key thing is when a lender or an investor or the SBA wants to know what your net profit is, you'll be able to give them because you have your profit and loss statements. And this profit and loss statement is going to help you do your Schedule C when it's time to do your taxes. So the end goal is you need to come up with your net income. And again, that's going to be your bottom line. So a lot of times people make the mistake when they think their income is just what they brought in, and they don't take in consideration that the expenses they occurred. So keep in mind your profit and loss statement is also the most important document, because it's going to help you prepare for your tax season. So again, just to recap, it's revenue plus expenses equal net profit, or revenue minus expenses equal net profit. Your profit and loss statement is important because it gives you an idea how profitable you really are. It doesn't matter if you have brought in $10,000 if you have $15,000 worth of expenses. So keep that in mind, is that this is going to help you get a big picture of how you're really doing. Either you're going to rejoice at the end of the year, or you're gonna tell yourself, I need to make some adjustments for next year because I'm spending more than I'm bringing in. Document number 3, this is your cash flow statement. This is like your flow through. This is how you determine what's coming in and what's coming out. And it's going to show your actual inflows. So basically what happens is that you're going to show what you have brought in the cash flow statement. And typically you do it month by month. This is what they call an accounting. You do your accounting and you want to see what you've paid for. Like for instance, if this is December, what did you bring in December? This will help you create a budget for next year as well when you have your cash flow statement, because you can kind of see where you are. And the good thing about a cash flow statement is you can start determine what your slow months are, because if you're doing it month by month, you can say, well, in June, it's been the last 3 years, it's been a slow month. Maybe, that's the month that maybe we just go on vacation, or we need a revamp our marketing tactics to make sure that we're hitting our mark in those months that we see some fluctuation of sales. So the cash flow statement is going to be, you're saying what's coming in and then what's going out. And at the bottom line, you know exactly what you're doing, because it kind of gives you a big picture. Because in the other ones, you just kind of doing like your total number, like total office supplies. But this one, you can be a little bit more detailed. And kind of, this is like a lot of times people will know, what's your cash flow? This is how to determine how accountable you are to yourself, to your business. And this is how they see how you're managing money. If you're spending too much on meals and travel, that may be a red flag to some people. They might not want to invest in you, et cetera, et cetera. So cash flow, always remember, it's the inflow and outflow. It's what's coming and what's coming out. And so this is another type of document. All 3 of these documents typically is what like the SBA requires. If you're trying to do any certifications, they're going to want to see some of these documents. So this is why these 3 are so important as you are growing your business. Again, to recap, a cash flow statement is where's my money coming from and where is it going? And this is going to be key, because a lot of times we're going to look at this to see, sometimes we try to figure out where we need to cut costs. And when you're doing that, you can kind of see right away, say by the second quarter, you're going to be like, well, we're spending too much on meals. We need to cut meals because we're spending too much on meals and we're not making much money. So if you're tracking your expenses over time and your income over time, you're able to catch these errors before the end of the year. So that way you don't be in the red, which the negatives. You want to show a profit, especially if you're trying to get a loan or get investors. They rather see you in the black than in the red. So with a cash flow statement, you can able to catch where you have your high spending. So again, why are financial statements important? You probably asking yourself. And you probably ask yourself since you started your business. So it gets solid. So solid financials can help you get loans and attract investors. I've said it since the beginning. Your business financials are essential for lenders and investors who want to see hard figures before putting money into your business. They want to make sure that they're doing a sound investment. They want to make sure that you have the money coming in to pay back what they're giving you. And investors, they want their return on investment. So if they're investing in there and they want 5% back, they want to need to know if they're going to get their 5% back from what they invested in you. And so it's kind of your blueprint to say, hey, I'm a valuable business. Please invest in me because I can pay you back. I'm as you can see, I'm worth it. I've done my balance sheet. You can see my assets. So this makes me very attractive to investors and lending institutions. Number 2, these reports give you an overview of your business's financial health. How healthy are you? You go to the doctors, You get a checkup, right? They tell you if anything wrong with you, they may give you a thumbs up, they might put you on medication, whatever. These documents will do the same thing. They will allow you to analyze your business, see how healthy you are. You may have to prescribe your company something. That could be, maybe I need more cash flow coming in. Maybe I need to readjust my products, my sales. Maybe I need to increase my margins by increasing my product sales, whatever. This is going to make sure that you have a financially healthy business. Just like going to the doctors, you want to see what's wrong with yourself. This will give you a big picture on how healthy your financial state of your business is. Number 3, it's going to be, I didn't put it on here, but number 3 is it's security. Knowing that you have these documents in place, you feel more secure going forward into the future. So number tip, produce regularly. A lot of these documents, if you get into a habit of producing these documents regularly, you will kind of it becomes a habit. And I always say keep them current. You set the schedule. I always say with the cash flow statement, you should do it every month. With a balance sheet, maybe every quarter. Profit and loss statement, that's something you would kind of do annually to get ready for the next tax season. So this is what you've already accomplished today. So give yourself a round of applause, because now you have identified the 3 financial statements. So if you're thinking about getting a loan or getting accreditation or even getting into the government contracting system, you already know what type of documents you need to start preparing yourself for today. You've also learned the benefits of each of these statements for your business. So you've already accomplished this today. So now you need to start, if you have not done any of these documents, especially the profit and loss statement, because December 31st closes out the IRS cycle. So any expenses up until December 31st will go on to the 2023 tax season. And so if you have not started your profit and loss statement, this is a good time to do it. Now, if you have an accounting system like QuickBooks or Wave or I can't think of the other one, you should already be, if you have been keeping your reportings in that, it's simple is to go to the reporting system, click on profit and loss statement, it'll generate it for you. If you're old-fashioned and you've been doing Excel spreadsheet, this is the time of the year to start looking at your spreadsheets to make sure you're prepared for the upcoming tax season. And especially now that, as you know, we're moving into a new Congress, there may be some opportunities, as we saw the last 3 years, from the CARES Act to the American Rescue Plan. There's a lot of opportunities that they're going to be presenting to small business owners like yourself. And you just want to make sure that you have everything in place so that you don't miss any opportunities that may arise in the next year or years to come. So that's kind of the presentation on understanding financial statements. So if you have any questions at this time, the floor is open. Daniela?
Yes, thank you so much, Stephanie. That was a lot of helpful information. We do have a few questions, but if you have questions, please include that in the Q&A, or you can just include it in the chat or just reach out to us as well. So the first one is, what is the best way to account for owner's investment / bootstrap dollars?
Sure. So I talked about in the cash flow statement, in the profit and loss statement, anytime that you put money into your business, that is going to be income. So what you should have done was, in your chart of accounts, you need to make sure when you have your income, you can include, now chart of accounts, back up. So chart of accounts is like line items in your accounting system. You label it. And so under income, you can actually label account system as owner's contribution or owner's equity or partnership distribution or something like that. So that's how you account for it under income. You want to do a line item and you're going to put in there owner's contribution. That is income because you put money. Remember I told you about in the cash flow statement, that's the money that's flowing into your business. So that's how you report your own contribution into your business. Hopefully you have this, whatever you put in, hopefully you have reflected into your operating agreement, which specifies an owner's contribution.
Thank you,
Okay.
Stephanie.
You're welcome.
We do have a second question. It's, do you offer any training on how to use QuickBooks?
Daniela?
Yes, we are planning on having a session on how to use QuickBooks in the next year, 2023. So again, stay tuned and keep looking at our website, and I will be sending an email on that as well. So the next question is, can I find these financial documents on QuickBooks, or should I simply download them from Google?
So if you have QuickBooks, in the reporting, if you have diligently put your stuff into QuickBooks, you just go to QuickBooks and run reports. You can run a balance sheet, you can run a cash flow statement, and you can run a profit and loss statement. It's all depending on you, how diligent you were in doing it in QuickBooks. Now, if you had like a bookkeeper or a VA virtual assistant, hopefully they did their job and submitted. But in QuickBooks, in order for these financial documents to work, you have to put the information in there. So when you go in there and you set up your QuickBooks, you put all your information in there thoroughly and to the best of your knowledge. So that way you can get an accurate depiction of what your financial state of your business is. And so, or should you download them from Google? Yes, you can Google balance sheets, profit and loss statements, and you can download cash flow statements. Or you can come through us at the DC Women Business Center, and I have all three of those documents handy that I provide to our clients. And so I hope that answers your question. It's all about how diligent you are with QuickBooks. A lot of times people just know a little bit about QuickBooks to put their information in there, but they don't know how to put all that information in there. So I know, like Danielle said, we're going to have a QuickBooks training, but it's all dependent upon what you put in there. So I hope that answers your question.
Thank you, Stephanie. We do have another question as it relates to QuickBooks. It's, will Quicken do this, or does it have to be QuickBooks?
They all do it. All financial systems do it. Again, it's based upon what you put in and how you set it up. All of them have reporting issues because typically, like Quicken and QuickBooks and Square, they also have the capability of reporting to the IRS as well, your income. And so if you're doing 1099s, things like that, it will also help you generate those type of documents as well.
We do have a question, but it's more related to me.
Okay, sure.
Hey, Janaya, this is Daniela, and if you did want to schedule another session with either myself or with Mrs. Stephanie, you can go to the website. You won't have to, again, do the lengthy application. You should be able to just schedule another session. However, if you're having any difficulties, you can always email me. My email is ddjiogan@ncrc.org, and I'll send it to you later. We do have another question. I am a new business. I don't even know where to get started. Is it recommended that I do my financials by myself, or should I hire an accountant?
Oh, that is a really good question. It's all about your comfortability level, right? Some people, they're comfortable. They like Google University. They watch YouTube videos, and they feel comfortable, secure. Now, if you don't feel confident, secure, and you still have questions, you may want to seek the help of a bookkeeper or accountant or CPA to get started. But it all depends upon, only you kind of know where you are and your comfortability level with these financial statements. I have some clients who be like, I don't even want to deal with finance. I don't like numbers at all. I'm just probably going to hire somebody, but only you can understand know your comfortability with levels of that, of doing your financials. Again, you can start off small. You can just basically say, you know, I'm going to go to Google. I'm going to download these documents. I'm going to play around with it and see, or I'm going to invest in the system. A lot of these systems like Quicken, QuickBooks, Wave Accounting, they all also offer demos too for new clients. So you can schedule a demo. And a lot of times I know with some of these systems, you can customize it to your business needs. But again, it's all about your comfortability level with numbers.
Again, thank you, Stephanie.
You're welcome.
We have another question from Georgetta.
Okay.
What about new businesses who are applying for certifications and those certifications require financial statements, but the revenue is low since they are just getting started in these newer businesses? Should we simplify any information or just report as it is?
So it's twofold. So I understand, you know, when you're a new business, you may not have all these financial statements. Of course, you're not going to have a whole year. If you just started a business like 3 or 4 months ago, of course, you're not going to have a full year of cash flow statement, or your profit and loss statement is going to look very weak. But my opinion, this is my opinion only, is that I think you should report as it is when you're doing the certifications, because they understand that when you're starting a new business, you're going to probably be more on the red side than the black side. However, if only if your expenses are justifiable. What I mean by that is, don't show, if you don't, I wouldn't put frivolous. Be careful what you're spending on. They're going to understand that when you're starting a business, you're going to have to buy a computer, right? You're going to have office supplies. If you can show that these expenses were justifiable, it looks better for you than, you know, I wouldn't show a lot of meals or anything like that. But in your financial statements, they already kind of know that you're going to be, in the beginning, you're going to spend a lot of money getting your business set up. So I have clients who have gone through the certification process and their revenue, net income, is kind of low, but they have showed that they pay for a website, they justify their expenses. Okay. But a lot of these certifications want more than 1 year as well too. So you didn't specify what certifications that you are referring to, but if you're going to show low revenue, make sure your expenses kind of justify the need of your business.
Again, thank you, Stephanie, for answering that
welcome.
question. Another question, if I do not have the revenue and I am a new business, how and where can I find an accountant at an affordable price?
Sure, there's a lot of places that you can find an account in affordable place. Is you can go to a site called Upwork. You can, and then Thumbtack. Thumbtack is a great place because with Thumbtack, what I like about Thumbtack is, and it's thumbtack.com, is that you could go in there and you set your budget, and then accountants can reach out to you based on your budget. And so, like for instance, I'm on Thumbtack, and so basically you put your services on there, and then if something comes across, I'll get alert. It's like somebody needs an accountant. I might get an alert that says that Daniela needs an accountant, and I click on there and it'll have the budget. So Thumbtack is a great way to find an accountant because I said it's based on your budget. You can say, I don't want to spend no more than $200 a month. It'll find you people, and then you can vet them on yourself. So the key too is, you know, they always say the good old rule, you get what you pay for, kind of thing. So you want to just make sure that even though the prices seem low, that you're vetting them as well. Because if they're pricing too low, are you really getting the services that you really need for your business? And so I think it kind of weighs it out when you don't have any money. Also is, take some of these courses like Daniela talked about. We have a lot of webinars coming up. Maybe for a while you just do it yourself, or seek the help of a counselor. A counselor can help you kind of be accountable and help you review your financial statements. These services, counseling sessions, even at like the Women Business Center, is free. So if you sign up for counseling, we can kind of help you in the beginning set up your financial statements and kind of give you key points. And we can also even look at what you already created to give our opinion on it.
Great. Again, if you have any questions, again, feel free to use the Q&A. I really want us to be interactive and again, answer most of your questions and actually all of your questions. Question that I have is, do you have any best practices to get started? And again, when do I do my financials? Is it at the end of the year? Is it monthly? Is that something I should revisit frequently?
I would say for me, it's monthly because you don't want to have to scrounge around at the end of the year trying to get everything together, especially when you're doing your financials. And I didn't talk about, and that could be another session, Daniela, is the record keeping part of this. So, like for the IRS, when you're doing your financials, those receipts are going to be key in your financial statements. The IRS, a lot of times the misconception is bank statements and credit card statements are enough for reporting. It's not. It'll help you build your financials, but the IRS requires you to have the actual receipt, and it's in their retention policy. You're supposed to keep the receipts up to 3 years. That's because that mirrors how long back they can audit you. And so you don't want to wait to December trying to find receipts, especially the ones that you have lost. If you do your accounting month by month, you can find errors before it gets to that point. I've seen a lot of clients scramble, especially around tax season, because they did not do their financials month by month. And so if you want to organize business and you want to stay on ahead of everything, my suggestion is make it a habit doing it month by month. Now, people always say they want to be competitive and be comparative to their competitors, right? I'm going to tell you now, most of these Fortune 500 companies, and I've worked in several of them, we do month to month financials, we do quarterly statements, and we've done end of the year. So that way you can get ahead of, I talked about in earlier, when you're doing your cash flow statement, you can find some issues. So if you do it month to month, you can say, ooh, I didn't make no money this month. You can then readjust for next month. You can say, you know what, I'm going to curtail my spending and really focus on my income. That's why it's best to do it month to month, because you can catch those things. If you wait to the end of the year, you're like, it's kind of too late, because in the year, the fiscal year ends December 31st, and you have spent more than you made because you did not really do an analysis month by month. So that's my recommendation. I know it's a little tedious to do, but I will get in the habit of doing it month by month. So that way you can see what your wins are and what your losses are way before December comes.
Thank you, Stephanie.
You're welcome.
And like Stephanie said, if you are having any issues, you just want a business counselor to review your business financials, or if you have any additional questions, you can always reach out to us at dcwbc.org, or you can email me. Again, our emails is it was on the slides and also on the website, so feel free to email us. And again, seek out that session with Stephanie. She's amazing in what she does, and so again, pick her brain and learn from her, because she's very amazing.
Danielle, I want to say one thing too. Also, is if you, so what you need to start doing best practices, because you mentioned best practice, is start figuring out where your money's coming from. Like, make sure that you sometimes I've seen people that do startups and their stuff is all over the place, meaning that they got money coming in from Square, they got money coming in from Cash App. Figure out a way to make sure that everything comes together in one report, because a lot of times as small businesses, we take money different ways. If you are like a vendor type of business where you have an e-commerce store, but then you also on the weekends vend at the Eastern at the flea market or at one of these little pop-up shops, you may be doing cash. So what you want to do is start making sure that you put all the money together. Because I'm gonna tell you now, if you're using third-party companies like Square, Cash App, they're going to report that income to the IRS anyway. That became effective as of January 1st of this year. Anything over $600 is going to be reported to the IRS anyway. So you want to make sure, and you don't want to be able to get that CP 575 notice next year because you failed to report an income. That's the notice that the IRS will send you that says, hey, you failed to report an income. Now you have a statutory deficiency, and now you owe interest and penalties because you forgot to report income. And that's key in doing this because of that. We want to make sure that we're recording all sources of revenue, whether it's Cash App, Square, PayPal, because a lot of times we have those different things because it suits our need. We use PayPal for our e-commerce, but when we're out selling, it's easy to use Swipe because we can swipe people's cards, or use Square because we can use the Square and we can use the tap. So just make sure that when you're doing this, that's why it's important to do it month by month so you can kind of see. You don't want to be caught off guard into the year or during tax season.
Great. We do have one last question, and the question is, in terms of financial statements, is that something you do every few years, or is that something you still do as you're doing your financials?
You do it every year. You do it every year because it shows your history. That is your history of your business. Just don't do it your first year. Make it a practice. That's why if the thought of doing this terrifies you or scares you, then you may want to use now you might want to understand each role. And that's key, Daniela, is that people need to understand the role of a bookkeeper, role of an accountant, and role of a CPA. A lot of times we think of accountant, but this something like these financial statements can be easily done through a bookkeeper, and you're going to pay less cost. Because typically you kind of paying for people's credentials. And so if you're using a CPA, which means certified public accountant, they have gone through 4 years of school, they have passed the CPA exam, and of course now they're going to be a high dollar ticket service. But sometimes as easily as just starting out, a bookkeeper could be sufficient enough. That's why I said when you're about to hire somebody, vet them, ask them some questions. First, the one question you can ask them is, have you ever dealt with a business like mine before? First of all, have you ever had any business client? Okay, yes, you have. Okay. Have you had any clients in my industry? Because everybody's financials are going to be different. It's not a one size fit all. Daniela's going to have a different financial statement than I do because maybe Daniela owns a car wash. That's going to be a whole different type of thing because remember in that balance sheet, it asks if you own land, property. Typically, if you have a car wash, people own that building. And so everybody is not a one size fit all. Just keep that in mind. So make sure that when you're vetting people, you ask the right questions because there's the ugly truth in business that people do get taken advantage of when they're not knowledgeable. And I always say knowledge is key. Ignorance is not bliss. So you want to make sure you vet, ask the question. My industry, I'm a hairdresser. I have a hair salon. Have you ever had clients that are similar to mine? It doesn't have to be a hair salon, maybe a barber shop, something similar like that. I work in the food industry. We have different costs. We definitely have cost of goods sold. Have you worked with somebody in this industry before? That's going to help you find the key person to yours. Or they might say, nope, I have not, but this is what I've done for other clients. So key is when you're hiring outside people is the vetting process, making sure you ask the right questions. And of course, here at the DC Women Business Center, we can help you craft those questions to ask to help better vet people for your business.
Awesome. Again, last question. I'm so sorry. So what are what are some few mistakes to avoid when you're again starting this process? Like what are some lessons learned?
So I mentioned one of the mistakes I see is the receipt part, not keeping your receipts. As I mentioned, a lot of times we throw away a receipt. So one of the best practices I'm gonna give you for receipts is make everything automated. Um, when you're buying online, um, always select send the receipts to your email. That way you know it's always in your email, right? So that's kind of a best practice is even for your billing, do everything electronic billing, electronic invoice, because those are the things you can track in your email. You can able to go to your email, get the receipts because the IRS will accept digital receipts. Um, and so um, that's kind of best practices. Now, when you on the go and you're out and about, the best thing I tell my clients is to take a picture, pick up your cell phone, right? And then snap the picture of the receipt. Guess what? Now you have the receipt. You don't have to worry about, you can actually throw it away. Just make sure you have enough data or whatever you call it on. I'm not familiar, I can't remember the name of the term, but make sure you have enough memory in your cell phone to hold this stuff or always back into the cloud. So that way you have it because again, the IRS will accept digital receipts. So just keep that in mind. Those some of the best practices is, kind of doing that's kind of a best practice. Another best practice is take all the courses that you can take for your business, especially the free ones. It's going to be beneficial for you because as I always say, knowledge is power. Information is key. And when you have a business, I'm gonna give you a tip here, and this is from the legal world that I'm in. If anything ever happens, typically in your personal life, ignorance is bliss, but not when you have a business. It's in the law books. It says ignorance of the law does not exist. And so what that means is that you're supposed to know everything about your business. And so that way, because in the day, if you have an LLC or corporation, you have to show that you are running a real business. And how do you do that? How do you keep your asset protection if you're being sued? The court's going to look to see if you actually had a real business, and they're going to look at your financial statements. They're going to ask you, did you keep good financial statements? Did you separate your personal and your business? Those are the things. So yes, it's important, especially when you have like the LLC or a corporation where you're going to eventually may have to show that you're a real business. And how do you do that? Again, with the IRS, they call it burden of proof. You have the burden of proof. So that means that you're going to have to prove that you have a business. So I know that's kind of wordy and long, but again, that's what we're here for, to kind of help you understand these terms and how it benefits your business.